So to talk about what an appraisal gap is, of course, you need to know what an appraisal is. The appraisal is just the bank coming in and evaluating the property to make sure that it is worth the value that they're basing your loan on. So let's say, for example, you're purchasing a house and you agree to a price with the seller of $100,000. And you agree to terms with the mortgage company that they're going to give you a loan for 80% of that, or an 80% LTV loan to value. That's an $80,000 loan. That means you are going to need a $20,000 down payment. In this case, the house has to appraise for the $100,000 in order for that loan and for everything to go through. Let's say that the house didn't appraise. Let's say it appraised for $90,000, appraised value. What an appraisal gap, or an appraisal gap addendum as it's sometimes called, that's you telling the seller when you make your initial offer that if there's a gap between the appraised value and the purchase price, that we will cover that gap out of our own pocket. So it's an 80% LTV, 80% loan to value, means the bank is only going to loan you $72,000 for that house. Now, if you've agreed to pay $100,000 and you've agreed to cover that gap, that means you're going to have to pay $28,000 to cover the $100,000 purchase price. So that $28,000 is your down payment plus the gap, plus your $72,000 loan gets you to your $100,000 purchase price.